Ken, you're somebody who would talk to us about the shilling. What is happening today? We appear to be losing ground.
Yes, as you mentioned, it's expected, especially in the last week of the month. Although this month, with oil prices coming off internationally, the pressure may not be as high as we saw last month. And also, as you had mentioned, the amount of crude that we're bringing in has actually declined for reasons that are not quite clear. So this may actually have eased the pressure that we usually see at the end of the month, but there was still pressure. And also, we've seen a lot of liquidity come in this week. So, and this always serves to weaken the shilling.
And speaking of liquidity, the central bank still trying to mop up that excess liquidity today. About 10 billion shillings is what the CBK was looking for. How did that go?
Yeah, they were able to pick about 6 billion off the market for varying tenors between 1 week and 28 days at an average of about 18%. These free primary education money was released this week, so a lot of this has come into the system, especially through government banks, with one of them being, banks that have a large government shareholding, with one of them being one of the top 5 banks. So this liquidity came into the market. They were looking to mop this up to actually support the shilling, as it also came under pressure from end-month importers.
Before we leave the subject of the shilling, is this only temporary because it is end month, and by the end of next week we should have stabilized again?
Yes, I think if the CBK keeps up the aggressive open market operations we've been seeing through the month of June, I think we should see the shilling begin to stabilize as from next week. As you mentioned, this is typical towards the end of every month. We'll always have a lot of pressure coming on the shilling.
We're expecting inflation figures out this week, but so far prime rate still on an upward trend, 91-day right now at about 10.5%. What is your interpretation of this?
Yes, we are really looking looking out for inflation figures towards the end of the week. We expect it to remain rather range bound. We don't expect to see an excessive drop in the inflation rate, especially since we've not seen much movement in the key parts that make up the CPI index. That is probably food and energy. So we expect it to remain range bound. Prime rates are still coming up. As we mentioned, as we've been saying, this is most probably a correction because of the rapid decline we saw over the last about 3 months. So what we've seen is actually the market correcting itself. We expect this to continue, probably begin to level off about levels of about 12%. So going forward, yes, and also what we're seeing is there's not that much interest in the T-bills, as most of the monies are going towards repos, which are paying a much better return of 18% compared to an average of about 10.6 that we're seeing on the T-bills.
The 182-day is right now at about 10.8%. You're saying you're expecting this to continue for how much longer do you think? How long will it level out?
It's a bit difficult to say, because as we enter into a new financial year, of course, central bank's policy will change, of course, and we also expect the Monetary Policy Committee, which will meet in the coming, early in the coming month. We do expect there may be some change, even though little, but there may be some change in policy. So it's a bit difficult to tell. We'll wait to see what happens in the new financial year, because most of the market is actually holding back. We've seen this on the fixed income market and on the equity market. We've seen a lot of investors are not quite clear the way, what will happen at the beginning of the third quarter. So they'll be waiting for a signaling effect. And that's what actually happened with the 10-year last week. That was quite a clear signaling effect from central bank, where they were very strict on the bids they accepted. Taking only 12% when market average is at about 15%. So this was one of the signals, and I think the market will be looking for more signals, especially coming from the Monetary Policy Committee.
You alluded to the oil price. Obviously, this has come off, and you're saying we're expecting to start feeling the effects of that in about another 2 months?
Yes, there's always a lag of about 2 months, because we order 2 months ahead. So yeah, of course, this would be felt probably on our inflation figures till probably towards the end of the third quarter.
Excellent. Let's move on to the Nairobi Securities Exchange. Today saw very huge trades on Equity Bank. What should we know about that?
Most of these were actually book realignments. As we move towards the third quarter, there are a lot of large African funds which were looking to realign the books. Sorry, not third quarter. As we move into the second half of the year, there are a lot of large funds which are looking to realign their books. So, as if you look closely, a lot of those trades were from by foreign investors. We could say these were actually foreign funds. But yes, it really contributed to the turnover. I mean, we haven't seen this higher turnover in quite a while, about 700 million shillings. Although the index did weaken somewhat because, as I mentioned, a lot of investors are also taking a step back as we move towards the end of the week. What we're seeing is demand is lagging off. So we may see the prices begin to come off as we move towards the close of the week, thus the weakening in the index. But turnover was quite high, mostly driven by that one trade.
Let's talk about Kenyan Market. It has been exciting the market over the past week or so, but today I think it has disappointed everybody. There's this update on the cautionary statement which doesn't say much. And maybe the only thing we can take out of this is that the company remains cautiously optimistic that a transaction with Puma Energy will materialize. Were you equally disappointed, or maybe you can read something in these tea leaves?
It's quite funny. It's actually a play on words.
Yes.
Cautiously optimistic. So basically, that just I think the Puma deal still holds. Where we might see a bit of disappointment is from current shareholders who are looking forward to getting quite a premium on the shares when Puma Energy came to buy them out. This might actually not materialize. They might actually get lower prices than they initially expected. So I think that's where the disappointment might come through. But as towards the finalization of the deal, I think it's a done deal. And of course, we do expect at going forward at some point they will delist off the stock exchange.
And that might, some investors will not like that. All they've said today is that the public should await more information, and they will advise when there's any more updates we should expect. Ken Minjire in Nairobi, many thanks for coming on the program.